We're seeing companies buying huge amounts of Bitcoin and ETFs purchasing huge amounts of Bitcoin, and there's just not that much Bitcoin to go around.
I became a fan of crypto, and to me it's an industry. I view it as an industry, and I'm president. It's a big industry, by the way. In fact, when the stock market went down recently, crypto and Bitcoin and all of that went down much less than anybody else.
I'll mention in the last 30 days, we've seen Bitcoin ETFs acquire $5.2 billion of Bitcoin. That represents institutional investors making a giant allocation to this space. We see that trend continuing. And with the limited supply of Bitcoin, it's just forcing the price up. I think we're detaching from $100,000, and I think we're going substantially higher from here.
Today, while the market waits in anticipation for the next leg up in crypto, and as Bitcoin continues to climb, Bitwise CIO Matt Hougan and Real Vision CEO Raoul Pal give us their update for the crypto market and why we're about to see an unbelievable recovery in just a matter of weeks. Hougan explains that while speculators initially drive price movements, giants like BlackRock have entered the market and shifted the cycle by pushing prices in the decrease we've seen just in the last week alone. He also points out that historical trends indicate a parabolic increase in market cap in the coming months. With real money now flowing in, he emphasizes that the crypto market has become more significant than ever, and institutional investors are driving the price of cryptocurrency. That will yield massive gains in 2025. Let's get right into the latest interview with Matt Hougan and Raoul Pal, as they give their prediction for Bitcoin and the crypto market, and where we're headed in the coming weeks. Drop your comments down below and subscribe if you enjoy the content we do here.
I think once we break the gravity of around $100,000, where we've been trading in and out of for the last 6 months, I think it's sort of anyone's guess where we go. Here at Bitwise, we expect Bitcoin to top $200,000 by the end of the year, which I know sounds like a very large number, but the flows we're seeing from institutional investors and corporations are really significant. They're accelerating, not slowing down, and I think they're going to force that price substantially higher. I think both of those are part of the story, but the bigger piece is just massive, unrelenting demand meeting limited supply. That's the other piece of the story. At the same time as you have this institutional allocation, you have very positive news from Washington. What we're hoping to see is the Genius Stablecoin Act, which passed through the Senate on a bipartisan basis, get through the House, onto the president's desk, and signed. That'll help Wall Street move into crypto in a major way. We're also hoping to see the Market Structure Act, called the Clarity Act, make progress through Congress. Those are the two big pieces of legislation. If we get those done this year, crypto is on an extremely strong footing. You're going to see, again, Wall Street make a major move into the space. You're going to see much fewer risks of blowups and fraud and negative events like we saw in the past. It's going to be a very strong foundation if those happen, and I think they might even this week. Become a two horses pulling this cart. The ETFs are still doing their part, but you're absolutely right. These companies are buying even more. For context, Bitcoin companies bought about 160,000 Bitcoin in Q2 alone. That's 100% of the net new supply of Bitcoin that will come into the market this year. So in one quarter, they bought the entire year's worth of supply. I know a lot of people out there are skeptical of this trend. If you're on the inside and you're seeing the proposals for new deals flowing into your inbox, you know that Q3 is actually going to probably be an even bigger quarter than Q2. So this is a trend that I think actually accelerates before it plateaus and maybe tails off at the end of the year. But I would expect significant buying in Q3 from this sort of quadrant of the market. But look, the way I think of it is fairly simple, which is most of us are 100% exposed to dollar-based assets. We're exposed to stocks, we're exposed to bonds, we earn our salary in dollars. If you look at the US debt and deficit, it's unsustainable. People need some exposure to an alternative. Bitcoin is the best of those alternatives. It's the fastest horse. I'm not telling my friends and family to put 50, 60, 70% of their portfolio into Bitcoin. But right now they're 100% dollars and 0% hard assets. I think having a few percentage points in Bitcoin, historically it's been good for returns. Historically it's had low correlations. I think it's a good investment bet, but it's also insurance against that fiat risk. I think it makes a lot of sense. Look, I think we'll get there on an international basis long term, but we don't have to get there for Bitcoin to be extremely valuable. Bitcoin could be worth more than $1 million per coin, even just to get to par with gold. And when's the last time you bought a cup of coffee with gold? Look, I do think Bitcoin has medium exchange characteristics. I think we'll get there in the 2030s, but Bitcoin's going to have to be priced $1 million or above before that's even really in play. You get all that as extra upside on top of this store of value investment. It's like a free option that you get for a core investment with, in my view, a high probability of success and significant sort of 10x style upside. I think that's what you get with Bitcoin. So you have the US Secretary of Treasury saying that market could 10x in the next 3 years. Try to think of another area of the economy that you can invest in where the government thinks it will 10x in the next 3 or 4 years. I think there's going to be an arms race from Wall Street to get into this space. Look, it'll take a long time before it replaces underlying networks if it gets there in any full shape or form, but you're going to see huge investment. Every Wall Street firm looked at Circle's IPO, 10x oversubscribed, the best performing stock on the market this year. They've all looked at Tether, which is the other leading stablecoin issuer, which makes $10 to $15 billion a year, and they want a piece of that puzzle. So there's going to be a flurry of activity once we get the regulations passed, the legislation passed. I think every major Wall Street firm is going to try to move into this space. So there will be a boom to be sure, and I think the build of that market will sustain over a number of years.
Embracing an unyielding enthusiasm for the Bitcoin realm, Hougan confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Hougan reassures that a long-expected surge awaits as we head into the second quarter of 2025. Now we'll hear Matt Hougan break down what implications crypto legislation has on Bitcoin and the market sentiment we can expect.
I think it's a really simple answer. There's unrelenting demand from corporations and institutional investors, and that's colliding with severely limited supply. You know, the Bitcoin network only produces 450 Bitcoin per day. Yesterday alone, Bitcoin ETFs bought 10,000 Bitcoin. This institutional investment into Bitcoin is a one-time event. It's going to take years to play out. But I think over the course of those years, there's going to be this persistent bid where there's more demand than there is supply. And the natural response to that is what we're seeing in the market, which is Bitcoin's price goes higher. I think it has a long way to go. I think it could end the year closer to 200,000. So I would get used to this story of new all-time highs. Look, at the end of the day, Bitcoin provides a service, which is the ability to store wealth in a digital format without relying on a bank. The vibes are definitely part of it. Vibes influence stocks, they influence bonds, but the underlying driver for the rise is more people want this service that Bitcoin provides. In this uncertain world where there are tariffs and geopolitical tensions, people want to be able to own their wealth in a digital format. We're seeing a massive number of people join that crowd, and that's going to force prices higher. I do agree, it's sort of everything everywhere all at once. We have positive regulatory news, positive legislative news, institutional adoption, concern about debt and deficits. Add those together and the price goes up.
Just using the liquidity framework, the business cycle framework, the financial conditions framework, it's all suggesting that the probability is, because they need to roll the debt, they're going to have to increase more liquidity, and this is just going to drive assets up strongly. And again, just so people understand why the business cycle matters for the ISM, if you think the ISM has been low, and then go and ask the average American running an average business in an average town, how are you feeling? They say pretty shit, right? People's earnings haven't gone up. Your mortgages are too high, your car payments are too high, etc. So what happens is when the business cycle picks up, there's more disposable income, and businesses have more investment income, and that gets driven out the risk curve always. That is what markets do. That is the game. And altcoins, as Julian said, are no different than junk bonds, no different to all the other stuff. It's all the same trade. So it feels like it's all to come for us. We don't see anything that suggests it's not going to happen. And we talked about before, the size of what's happening with global M2 and the dollar moves and stuff like that are very big. So no reason to expect that the move in asset prices is probably more than people expect. And I think the inverse to the business cycle being so low for so long will be the flip side of this cycle will be longer than people expected. because we've got this slight dislocation still working through post-COVID that then extends the business cycle. You know, we don't know yet, but it feels like it's Q2 2024 so far. But if financial conditions keep moving, if they really have done some sort of Mar-a-Lago accord and they get the dollar below 90, okay, then we're going on further. Yeah, maybe it's a full bubble cycle then. Maybe we don't get who knows? But, you know, one step at a time. But looks good. It all comes down to don't mid-curve it. It's like, you know, if the number go up of liquidity, the number go up of markets. That's it. That's all we need to know. The big picture part is, look, from our work, we kind of noticed the business cycle structure. We're both business cycle analysts. We've both been looking at them for a long time. It changed after 2008, and it became like a metronome every 4 years. That's only happened once in the past, which was the 1950s and 60s, where it became very, very cyclical. But this is perfectly cyclical. And it got me thinking for a while, what the hell? So many of us didn't understand what happened to asset prices after 2008. We kind of knew quantitative easing was happening. We kind of knew stuff, but we didn't figure it out. And what I suddenly realized is that in 2008, we had a debt jubilee. And in fact, it was just forgiveness on interest. You don't pay interest payments. Remember, we did that over COVID. Exactly same mechanism, no interest payments. So no interest payments allowed every government who had basically, they'd all gone over 100% of GDP in debt. So all economic activity, all economic growth was used to paying of debts. So what they all did was basically restructure their debts between 3 and 5 years, creating an almost perfect 4-year cycle. And then when you look at the debts today, we're in that 4th year now, where the final part, the larger part of the debt is due. And what we found is they start injecting liquidity over a period of 3 years, reaching maximum liquidity. That liquidity injection never really gets taken back. Some gets taken back in the bear market years when they're withdrawing liquidity, raising interest rates, trying to slow the economic cycle because of inflation or whatever. But over time, liquidity keeps rising. It's rising at a rate of about 8% a year. And that is, in fact, the debasement rate of fiat currency. And what happens is, and this is the bit that gets contentious with people and they hate it, if you divide an asset by the global liquidity, you get to see whether it's outperformed. The debasement.
People hate that chart.
Oh, they hate it. Yeah, it is the best chart in the world because it then tells you, okay, if I'm to allocate to the S&P 500, I'm basically breaking even versus debasement. So the S&P 500 is not really adding much value.
Matt Hougan challenges the conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Hougan asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Hougan highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Hougan also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Matt Hougan? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?